Hey guys, welcome back to another video, and today I'm here to talk about where I think the stock market is going on Monday and also what I think you should do considering the newfound circumstances. So if you do enjoy this video, be sure to smash that like button, also subscribe to the channel. Really appreciate the support from you guys. We're at 700 subscribers, on our way to 800. Thank you guys for watching. Let's get right into it. So the stocks that we're here to talk about today and the predicament that the stock market is in starts with, let's look at the portfolio in the past week. So we were up actually $4,500. We were up 18% in only a week. This was only a few days actually. And then ended the week only up 8%, almost 9%. So there's a very big drop. We went from, you see the all-time high in the portfolio of 29,000 all the way down to 26,000. So definitely a sizable drop right there. If we look at the S&P 500 SPY ETF, we can see that dropped almost 3% on Friday, which is pretty unheard of. I mean, that's definitely going to show a sizable drop in the ETF. I mean, look at even on the 3-month chart, this looks like a move that lasted about a week, but it really all happened in one day. Even on the year chart, there hasn't been a drop this big in a very long time. And this drop is for reasons that make a lot of sense, because we see that the news that actually came out today is Trump, the president right now, renewed tariff threats, and this is spooking Wall Street. So U.S. stock closed sharply lower on Friday as President Trump and China traded blows on tariffs. Tariffs, seems to be the word of the year in 2025 here. A lot of companies make a lot of their products in China. Their products are exported through China, but we all know our current president right now is not a big fan of China, and he doesn't get along well with the Chinese government either, and they don't get along with him. Jinping right here, they don't get along very well. So it's not really working out very well in that regard. I mean, the stock market's been good, but in the trading and tariff department, it hasn't, which is a huge part. So some very strange things are happening in China. Trump posted on his social media app, Truth Social. Interesting name. So ultimately, though potentially painful, it will be a very good thing in the end for the USA. One of the policies that we are calculating at this moment is a massive increase of tariffs on Chinese products coming into the United States of America. So Trump has been doing great things for the economy, to say the least, but it's not been good on the tariff side. I don't like involving politics with trading in the stock market, but they are two things that go very close hand in hand. They're, very similar aspects. A lot of the financial decisions are based on the government and what's going on. So if we keep reading through this article, we just see that there's data that focuses for investors as the release. Looking ahead, investors are counting down for earnings season to start in earnest next week. So earnings season's going on while the stock market is dropping like this. That's a scary thing. Because if companies come in and they're reporting under what they thought they were going to, under guidance and under what expectations are, then that's going to really drive the economy down. And honestly, I think the economy is looking like it's in a scary place. That's what I wanted to make this video about and tell you guys that if you have some cash on the sideline, maybe, hold it for a little bit and see what happens, because this is the same thing that happened actually. If we go on the 5-year chart, this is the same thing, actually farther than 5 years. This is the same thing that happened here in 2018, if I'm not mistaken. You can't really even see it anymore, but look at how much the stock market dropped, especially 2020, early 2020. This is a sizable drop, and I think we're going to see one of that size. You can't even really tell right now in the stock chart because stocks do go up in the long term. So that's another reason. I'll get into that later of what my move is for this, circumstance. But another very big thing is that as of mid-October 2025, approximately 750,000 federal employees are on furlough and not receiving pay during the government shutdown period. Additionally, hundreds of thousands of other federal workers are required to continue working without pay. So there's easily over 1 million people in the U.S. I mean, the government is one of the top employers in the U.S. They are, providing payment for a lot of workers, a lot of federal workers. So 750,000 federal employees are on furlough and not receiving pay, and then hundreds of thousands of other federal workers are required to continue working without pay. So all of these people working without pay, this is a sizable, portion of the U.S. population works in this part, and if you don't work in this part, then people are still going to feel it, because there are people that are very important to the society of America. And people that are working and not getting pay are not going to be able to go out. They're not going to be able to buy things off of Amazon. They're not going to be able to eat at Cheesecake Factory. They're not going to be able to invest with SoFi Bank. They're not going to be able to afford their Celsius. They're not going to be able to buy Nike shoes, and the list goes on with almost every stock in here. They're not going to be able to do a lot of things. So it's, very important that these jobs start getting pay again, because the economy is looking scary without it. There's a lot of money that's not being, thrown into the economy that should be. So I think that, my opinion, this is just a guess, but this is an educated guess, is that we're going to see a similar thing that happened in 2018. I'm thinking that we're going to see the stock market drop a sizable amount. I think the move is going to be, around what it did over here in February to April, but I think the move is going to be more drastic. I think it's going to be a bigger move. This was a huge move, to say the stock market was up 81%, went all the down. It went down about 30%. From $609 to $500. Or maybe not 30, but around 20% in a very short amount of time. I think that was just a warm up for this move, because that was, on fear of the tariffs again. And then if you look at a lot of single stocks, they pretty much made this move, except more exaggerated. Like, for example, Elf, a makeup company that I talk about, this one was down 10, 12, 13% in total, and you include after hours and everything that happened on Friday. We see that this one in the past year, this one had a very huge drop. It was $133, and that price, it got cut almost into a third. It went down to $50, and then now it's back up to where it was. But I expect it to reach, near that bottom again. I don't know if it'll go all the way down to 50, because guidance looks very well. They're performing very well. This is company specific. But just because of these, newfound tariffs and things that are going on in the government and the economy, I think we might see a drop again to the same amount. So I wouldn't be surprised if that happens. It's very likely. I think that every single company that you guys can invest in the stock market gets a lot of their products from China. These tariffs are affecting these companies directly. They're affecting me and you. And this is my game plan with this, is I'm holding my long-term investments, because it's about time in the stock market, not timing the stock market. You guys know how that is. You guys know that's my main thesis. Okay, that's how your thesis should be. If you're an investor, you should try to keep your timing. You should try to keep your time in the stock market. Very confusing saying. And you shouldn't try to time the stock market. That's just what that's what I've always been taught. That's what's worked for me. So I'm going to hold Amazon. I'm going to hold Google. I'm going to hold food. I'm going to hold my long-term big holdings. These smaller ones, like Nike, for example, I'm not sure if I'm going to hold a bunch of Nike right now. Down 7%. I might just take the loss to get this cash right here, 1,800. Maybe I'm thinking about it, because Nike is not a stock that I see benefiting at all with this economic downturn, and that's not one of my huge holdings long term. Like AMD, I'm gonna dollar cost average down if it does drop. I'm up 100% on it. I'm happy being up only 10% and then dollar cost averaging down. I believe in this company heavily. So there's a lot of companies that I am holding long-term, Elf, AMD, because anything can happen. The market could not drop. I could be completely wrong, and it could be green on Monday. You never know. I don't think that's what's going to happen, but it could happen. It could, end next week at positive 5%. Who knows? But from what I've seen from from my investing experience, which is over around, give or take 5 years, this is what I've usually seen. So it is an interesting time in the stock market. You have to make the right decisions, but you also can't be a trader. Not a trader, trader is what I'm talking about. You can't do that. So there is, if you do want to play this more short term, which I'm thinking of doing, then I'd play it in something like SQQQ. This is an inverse, a 3 times leveraged inverse of the S&P 500. We see that, this is a stock that's going to go to zero eventually, probably, just because it is going to go to zero eventually. That's just how it works with these, inverse ETFs. If it's a great company, which the S&P is going to go up over time. So this one is going to go to zero eventually, but if you want to catch some wind right now, I think that it's a perfect time. You saw it's up, you can see how drastically it's down year to date. It's down 47%, but there have been moments like in April right here. If you invested at $36 and then it went all the way to 52, you would have made a lot in a very short amount of time. But yeah, in a day here, you see it's up over 10%. That's because of how much the S&P dropped. Another one that I actually shout out to Financial Education, Jeremy Lafargue. He actually was talking about this in one of his videos. It is, if I'm not mistaken, it's PLTZ is the stock. Yeah, so this is amazing strategy. Shout out to him again. Financial education, way bigger YouTuber, definitely a big inspiration for me. But he was talking about investing in PLTZ, which I think is very smart. Also, TSLZ. These are inverses, 2 times inverses of Palantir and Tesla. So they're very cheap stocks because Palantir and Tesla have performed very well over the long term. These inverses are not performing very well. We see this inverse IPO at $33. It's probably going to be delisted off the Nasdaq pretty soon here. But while you can get it, Tesla gets hit hard in these. So let me just preface and show you guys the S&P 500 first. In the past year, we see that this is how much it dropped. It was at $564. It went all the way down to below $500. That was in a very short term. That was in literally 6 days. It made that move. Okay. If we look at Tesla, let's see what move that made over that period of time from April 2nd to April 8th. The S&P was down around 11%. If we check Tesla from April 2nd to April 8th, let's find it right here. Oh yeah, this one is $282, and then it dropped all the way to $221. So pretty much, over 20%. So pretty much just double what the Nasdaq did, and then you put it in that inverse ETF, and then that's quadruple. You're getting quadruple the gains if Tesla does begin to fall, which I think it's going to fall. Usually when there is these economic downturns, it does very, very poorly, especially because a lot of people invest on margin with these big companies like Tesla, like Palantir, because all time they perform so well that people get away with investing in margin. But it does look like Tesla is probably going to get hit very hard. We see what happened to them. 2021, they were at their peak, $381. And then this company was $123, not even, just about a year apart. So that's something that could very well happen very fast. We see right here, even in the beginning of 2025, from $400, they dropped all the way to $260 in about a month, 2 months. So these are very volatile companies. Same thing with Palantir. We see Palantir. Palantir has been very volatile on the upward, trajectory. But same thing with, check this, February 14th, it's at 120, and then we take it to April 4th, it's at 74. So it's almost, cut 50%, which can happen very fast, especially with a company inflated at these numbers, trading with the almost 600 PE ratio. Same thing with Tesla. That's why these companies are so volatile and they could get hit so hard, is because they're trading at PE ratios that are absurd in relation to what their valuation is. They're both great companies, I think, in my opinion. I think they're both great investments for the, probably not, maybe for the long term. I don't know. They have good fundamentals as far as companies go. Palantir's is definitely better than Tesla's, in my opinion, but Tesla is still a good company. So yeah, I think that these both investments, TSLZ, don't forget that, it's a ticker symbol, it's T-Rex. I'm not sure why it's that, but it's a 2x inverse Tesla daily target ETF. It's the inverse of Tesla stock times 2, and then same thing, PLTZ, Palantir. This is a 2x inverse as well of Palantir stock. So I think these are both great investments right now. Definitely you want to catch this before the end of the year. If I'm being completely transparent with you guys, I'm thinking that I'm going to sell my Nike shares, almost $2,000 worth right there, and then probably throw half into the Palantir inverse. I think Palantir is going to get hit hard. Very hard. Palantir, it has good numbers, but just because of how expensive it is in relation to where the economy is, I think it's probably going to suffer. So that's all I have for today's video, guys. If you did enjoy it, be sure to smash that like button. Also subscribe to the channel. It's very expensive to invest into some of these big stocks like Amazon, Google. Very expensive, but it's free to subscribe to the channel and turn on post notifications. So thank you guys so much for watching. Gonna upload another video tomorrow. Be on the lookout. Market open on Monday. Catch you in the next one. Peace.